Good morning, everybody, and welcome to Full Transparency Trading, where I am your host, Sebastian. Good morning, and welcome to another Full Transparency Trading session, where I am your host, Sebastian. Today, we are here with a guest, my lovely lady, Tiara Mitchell, and I'm going to be showing her a little bit about day trading. Today, we have earned $579. We're going to find out when, because I was not at my computer when it happens. So to do so, what you do is you go down here to your orders, and as you scroll to the right, you click on trades, and then boom, it'll tell you where your trade was. So it'll show you here that 617, which was what, yesterday I lost like $100, $200, and I made like $190, which gave me a negative balance of $115. So when I lose, I'm allowed to take a second trade, or 3 trades total in a day. Since I won the 190, that put me up. $500 happened when we hit the area of 535, which is where I had my trade sitting. We actually just broke that, but after 535, if I go down to this right here, the 1 minute time frame, you see it exactly 8:59, right before 9 o'clock. It hit my trade, which is right here at this blue line, triggered and went down to this blue line. So that was the area that I believe the trade was going to move through, and it moved through exactly that area. You can see we went down from 535, 510, 535 is about right here, so that's where my trade would have entered. 510, actually right here, right above this blue line there, and then it went down to the next blue line. So I could have made $1,000, but when I'm not watching, I don't plan for that. I just let that happen organically. So if I'm watching, I'll go for the $1,000, $2,000, etc. But when I'm not watching, I usually cut my goal in half. Why? Because we have been moving up this trend all night long. So we bounced there at that blue line, and you'll notice that my lines are very accurate. Bounced there a bunch of times, it sends us north. We stop there a bunch of times at the next line, sends us south, and then finally we break through. It pulls you back through. And what this is this is supply and demand. So how supply and demand works, supply is something that I have to sell. So when it hits the supply zone, it starts to sell off. Demand is where everybody's buying at. You have a demand for something, like this is the PlayStation 5 down here. Everybody wants the PlayStation 5. All these people are buying the PlayStation 5, so the price is going up a little bit. It comes back down to where everybody's comfortable. Then all of a sudden, a ton of people who have been waiting for it to come back down to the play. Oh, that's actually a really good move right there. A ton of people who have been waiting for this to come back down to the PlayStation 5 price jumped in right here. So you see, boom, it's loading up, it's loading up, and loading up, and then it explodes off that line, breaking this level of resistance here, or the highest point price, the price point there, and then taking off towards my next level, which is right here. So I draw these levels out by going to this 4H right here, which stands for 4 hours. And the 4-hour time frame tells you the entire story of the stock market by clicking that there. You'll notice that you see on here, there's a ton of blue lines, but just now when we were looking, there was only like 3 or 4. So I'll go through here, see all of these levels that I draw out. The same exact thing that I just showed you on the 1 minute time frame, where it's a bunch of bunching down there, happens on the 4-hour time frame. But because the higher time frame actually tells the story of the stock market and where the levels are, where the prices actually are, see right there, boom, 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 I put a blue line there. Boom, 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 down here, I put a blue line there. And my trades react off of those blue lines, because everyone looks at this and goes, this is where the level of the stock market should go. So now that we're breaking this line, we're gonna do what? We're gonna reach for that next line. Had I already been in a trade, I would just ride the trade to that next line and then expect it to pull back there. But since I'm not in a trade, we're just gonna see what happens at 9:30. As you can see, it's slowly breaking out. That's called a breakout. Once it starts to trend up and it breaks like an area of resistance, all these blue lines mean resistance, where the price should be getting pushed down. Once you break that area, you start going for the next zone. 1 minute time frame, on circle right here to refresh that, and now you can see how clean it looks when we actually look at it. But you see right there at that 620, you'll start to notice that at even amounts, the market naturally reacts, because people are standard. Everybody's mentality is standard. You don't like odd numbers naturally, like even numbers. So a lot of times, and then if you do like an odd number, it's like a 25 or a 75 or a 50, right? So most people are looking for even numbers to set their price points. So 600 is really the price point. The move to extend beyond that would take you to what? 620. We hit 620, and immediately we started rejecting back towards the $600 mark, pushing us back down. Now the actual stock market opens in about 3 minutes, so it's going to start to see a lot of strong variation here. The next price point that you will look for this to come back down to is right here at this 40, so $30,540. and then have a reaction off of there. But normally what happens at 9:30 is you'll see a ton of orders coming in. So right now we're seeing the preview for all those orders. It's taking a while. It's taking a while. Then right before 9:30, it pops off. And then at 9:30 exactly, you'll see this thing go really crazy, and it can jump all the way down here, or it can jump all the way up to 800. Now we have $578 for the day. Obviously that's good. Stop. We can go for $1,000. We can go for another couple $100. We can take a smaller trade by coming over to this and going to micros. Type M and N, and you see that says micro NASDAQ. So the micro NASDAQ is a smaller version of this, where we're paying pennies on the dollar. So every dollar here is $10 on the other stock. Now we can come here and take a safer trade, a less expensive trade, by trading this market here. So now where I would go is I would go up to, like, let's say right here, 755, 30,755. So then cross this out, type in 750. Okay, click on one. No. I'm physically clicking. And then that creates a trade. So now we need to create a buffer for ourselves. We're gonna risk $50. Right here, type in 50. And then our gain that we would like to do on contract, we want to go for a $50 move, type in 100. Save, and then that will automatically apply a 2-to-1 trade. 2 times the amount that we're risking, what we're getting back. Why I'm okay with that is because we have 578, so finish the day with 520 if we lose this trade, right? But the likelihood of losing that trade is actually weaker because we understand the move per hour and the 1 hour time frame. See all of this resistance right here, all these times where we bounced here and went up, bounced here and went up. This is called support. You have a support system that holds you up. Below that, it will be resistance. It will be the roof. So since these little lines here are acting as a top, we're gonna sit there and see if we can get a trade to go up. And even if we don't get the $100, we'll settle for just taking profit, because it's all about growing your account positive. Started the day with negative $15. We're currently up to negative $18. We're currently up to $482.48. All right, it is 9:30, and as you can see, like I said, there's going to be sharp move at 9:30. So let's go to the 1 minute time frame and see how fast it's moving. Look at that dip down. That dip down brings us back into absolution. What I said, we're going to come down here to this 40 area, came down that 40 area, and then we bounce off of that to take us higher. So now we'll just sit. We'll leave it. We're done for the day. We can go to work. We can go do whatever we're going to do. We have positive money. We're going to shut it down. We're going to let this happen naturally. If it occurs, we'll either get the $100 or we'll lose the $100. And you can be done there. What happens with me is I come in here, I get into it, I'm watching it, I get emotional, and I react emotionally to what's happening in the market. Like just now when that jumped down all the way up here, and I'm like, okay, I would jump in there, market, and then you see it's pulling down harder. So it can rip through all of these old levels that it put behind. It can rip through all of those, or it can go higher. And what you want to do is avoid playing in that area where it's deciding. That's called decision-making time, as my coach taught me, where it's deciding where the market should go. So we've been trending. A trend is when the market's moving in one direction. We've been consolidating up and down and up and down and up and down, and then we've been trending up. Guess what? Because that happened overnight, we usually have to fill all of these gaps back up to allow retail traders to get in on the market before the market actually starts correcting itself. Look where we came to. I told you we were going to the 40s. We came to the 40s. Now we're bouncing off the 40s. We're all the way back up there. And initially and eventually we should break out and head to this point here. And then 750 is the gap. 700 is right here. All we need to do is make it through halfway of that gap back down to this line, because it should go from here back down to the line. We make it through halfway, we'll make an extra $100 on that trade to give us $676 because it costs us $2 extra. That in and of itself is the basics of day trading, how I take my trades, how I make money. And it's not all wins. You see, my first win was $11 and I got $8 out of it. My second one was a loss, and it's because I set my trade up. I let it play out. If you lose $100, you lose $100. It costs $150 for the losses. It costs more to lose than it does to win. It costs $100 for the loss. The fees after fees and commissions, it's $148. But it cost me an extra $2.22 to lose. So obviously, it's more beneficial in your trades. Got $500 in the win. We ended up with $498. Why? Because they took $280 out of it. You're gonna see this struggle for a while here, and then it should take off towards the direction that we're at, because the trend of the overall market today is green, or in my case, because you see the trend. Bounce there, up, consolidate, hit there, break out, consolidate, go up, back, and then it's doing the exact same thing now. We're in this up phase where you go back and you're working to go higher. We're sitting at one of the much higher points to give us plenty of room to maneuver and get our $100. That's it for today, guys. This has been another Full Transparency Trading Session where I'm your host, Sebastian Tier. Did you learn anything? Find that actually not as complicated as it seems when I'm here by myself now?
I don't know.
I mean, it's only your first time sitting down at the computer, but as complicated as this seems, it's really not that difficult. This is the easy part. I mean, the easy part. The hard part is actually controlling your emotions and controlling and having discipline to actually trade through the day. That's it. I don't want this video to be too long. As always, you guys know the motto: take the easy money. You know, get in, get out, get up. It's been another Full Transparency Trading Session where I'm your host, Sebastian. I'm out. Just Control T, Control out.